what are two massive secular trends playing out in front of us and saying, these will get me there because they actually go up in value faster than the debasement. It's playing into the two biggest trends we've ever had, which is the trend of technology and another technology, which is cryptocurrency, blockchain. Right? Blockchain currently is the fastest adoption of any technology the world's ever seen, and it's been the best performing asset class in all recorded history. It still does like 100% plus returns, just Bitcoin alone. That's la la land for regular investors. Yes, it comes with volatility.
Raoul Pal, founder of Real Vision, has predicted that the current Bitcoin bull market could extend into 2026, well beyond the usual expectations of a 2025 peak. Recently, Mr. Pal reviewed several macroeconomic indicators, historical price action, and liquidity metrics that he believes paint a compelling picture of a prolonged bull run for digital assets. Central to his thesis is the notion of global M2 money supply, an indicator that tracks the total liquidity in circulation worldwide. Mr. Pal noted that Bitcoin, like other risk assets, tends to be closely correlated with changes in the global M2 money supply. If this is the case, the M2 money supply will continue to increase throughout the year. If so, cryptocurrencies and risk assets like tech will perform well throughout the year. According to Raoul Pal, Solana and Bitcoin can still grow at 100% plus annually. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now let's get back to Raoul Pal's view on Solana and the overall crypto market.
The economic system is not going to be something that we really truly understand. That doesn't mean it can't be good or anything else. What it means is you and me as individuals, I think, and everybody watching this, I would say, listen, how do you navigate the most unprecedented change humanity will ever go through? Simply is be as safe and secure as you can be. And so I think 5 years, this 5 years is the time to ultra focus on getting as many lifestyle chips. And that, money accesses your lifestyle chips, but lifestyle chips means a roof over your head. It means the ability to make decisions and have some economic freedoms. So you can observe the creative destruction of the exponential age. So it's a very serious message. If you go to the average 30-year-old, they can't afford a house. They're starting to think about having kids, or the millennials at 35 are having kids. They don't know how they're going to afford that. Asset prices, because of debasement, keep going up in value versus income. And so they don't have the same abilities as I did, or more extreme, my parents did, or your parents did. So they're looking at this thinking, am I going to be able to participate in an economy like this and have Maslow's hierarchy of needs met? Am I going to have a roof over my head?
Comparing current liquidity trends to those observed in 2017 when the dollar weakened significantly and stock markets soared during U.S. President Donald Trump's first term, Pal argues that the macroeconomic backdrop also appears conducive to expansion. According to him, if major economies continue their monetary easing, it could lead to the next phase of explosive growth for cryptocurrencies. His analysis draws parallels with 2017, when Trump's fiscal policies and monetary easing led to a prolonged period of dollar weakness, which fueled the cryptocurrency cycle. Similar conditions are currently unfolding with expectations of rate cuts and stimulus measures. A crucial factor in Pal's thesis of a prolonged bull market is the economic cycle, which he tracks through the Institute for Supply Management's Manufacturing Index. Historically, an ISM reading above 50 indicates economic expansion, which correlates with rising Bitcoin prices. Pal suggested that if the ISM continues its upward trajectory, Bitcoin's price could surpass $300,000 or even higher. However, he refrained from making specific predictions, emphasizing that probabilities, not certainties, guide market analysis. Regarding the altcoin market, Pal maintained that Solana and Ethereum remain key components of his portfolio. Despite Solana's recent drop of over 53%, he dismissed fears of a long-term decline, saying that Solana has outperformed the global M2 aggregate. Solana is expected to outperform Bitcoin for the remainder of the cycle, as is Ethereum, with SWI outperforming Solana. His broader view of altcoins is based on the evolution of risk appetite linked to easing financial conditions. Historically, altcoins outperform Bitcoin in the second half of the cycle, when investors seek higher beta opportunities. Paul criticized the idea that there isn't an altcoin season this cycle, saying that's complete nonsense. Paul emphasized that large pullbacks are a feature, not a bug, of cryptocurrency bull markets. He detailed past corrections, noting that the current cycle has seen 7 corrections of more than 20%, while maintaining a 600% gain from the lows. He warned traders against leverage and panic selling, reinforcing his "don't blow it" thesis. To make more money, to blow your future, you have to learn how to manage volatility. One of Paul's most notable claims is that the current cycle could extend into 2026 rather than peaking in 2025, as many analysts predict. His reasoning is based on the prolonged period of economic stagnation that precedes accelerating growth. Although he clarified that this is not a prediction but a working hypothesis, the implications could be significant. A longer cycle would allow for higher valuations, a sustained flow of investment, and a gradual rather than explosive peak. Paul reiterated that the cryptocurrency market follows a predictable pattern with a banana zone of exponential growth throughout the year. He noted that the current correction phase is in line with previous cycles and should lead to a new rally in April to May. We are currently in the first correction phase. Then, as we approach March, April, and May, we will begin to accelerate again toward the next phase of the banana zone. However, he cautioned investors to expect another major correction before the market's final peak, warning against leverage and late-cycle exuberance. Paul issued a stark warning about the rapid transformations in the global economy, driven by unprecedented technological advances. Paul, who has long advocated for a better understanding of what he calls the exponential era, argues that the coming years will bring the greatest changes humanity has ever experienced, due to the rapid development of artificial intelligence and robotics. According to Paul, we are approaching what he calls the economic singularity, a point beyond which current economic, market, and business frameworks will no longer apply. By 2030, things will become incomprehensible from an economic, financial, market, and other perspective, Paul explains. He says AI and robotics are advancing at a pace that will soon outpace human capacity to adapt to current economic systems. Paul is particularly optimistic about the transformative power of blockchain technology and cryptocurrencies in this context. He describes a future economic model where AI agents would perform tasks and transactions autonomously using cryptocurrencies thanks to their ability to operate independently of traditional banking systems. We're going to have to get through this together, and we have to be smart and try to figure things out as we go. We have 6 years to make as much money as possible, and that's crucial because cryptocurrencies are the best performing asset in the world and of all time. So that's our only asset. They have a bright future.